bottom line.
Hi, I'm Jacqueline Powell, and I'm hosting today's episode where we'll be talking about instant payments and associated trends across Europe, the UK, and the US. Today, I'm in the company of Leo Lipis, the founder of global payments consultancy Lipis Advisors. Leo has over 25 years of experience in payment systems consulting and research on all 6 continents. Prior to founding Lipis Advisors in 2007, he held positions in payment strategy and analysis with commercial banks, clearinghouses, and central banks. Leo works chiefly in transaction banking, payment system strategy and design, and treasury management. Welcome to the Payments Podcast, Leo. It's great to have you back on the channel.
Thank you, Jackie. It's a pleasure to be here.
Now, in December, when we last chatted, Leo, you saw the evolution of cross-border payments as one of the many defining events or trends for 2024. As part of that topic, you touched on the evolution of the EU's instant payments. Since then, several things have happened. The European Council has adopted the instant payments regulation, along with using the verification of payee service. The UK has proposed measures to drive down authorized push payment fraud, which could potentially slow down the processing of instant payments. And of course, FedNow is live with about 600 or 700 of the 9,000 eligible US financial institutions signed up for the service. So possibly slower adoption than one might have hoped there. But add to the mix projects like CBDC, AI enhancements, and of course, the ISO 20022 deadlines, and one can appreciate that banks are clearly stretched. So, Leo, despite the huge benefits that instant payments will bring to bank customers, we've got quite a boiling pot going on here.
Yes, it's quite an impressive storm that's brewing.
Okay, so let's explore this a little more then. I have some questions for you. Firstly, you've written recently about the complexities facing EU banks. In your opinion, what are some of the most important challenges?
To my mind, there are three key challenges facing the banks today. The first is compliance with this instant payments regulation that you just mentioned, which has to happen, of course, in short order. There's no doubt that instant payments has been a growing trend around the world, and with instant payment systems now available in over 70 countries around the world. Of course, they've been available in the UK since the mid 2000s, since 2008, if I recall the year correctly, and in the euro area, Europe zone wide since 2017. So the systems are not new by any means. Of course, the rate of adoption across the euro area is quite varied. You have some countries like France or Germany where adoption is quite low, and you have others like the Netherlands, Belgium, Spain, where it's much higher. So there are quite some variations there, and I think actually dealing with that and harmonizing it across the euro area is going to be quite challenging for many of the banks. The second area I would add to that is cross-border payments. Of course, we've had one leg out payments going through real-time payment systems for quite some time. In particular, we've got the payments originating overseas scheme, for example, in the UK, that allows UK-based banks to take inbound cross-border payments and drop them into faster payments so that they arrive at their final destination much more quickly. And of course, that's now been possible in with the OLO scheme, the one leg out scheme within SEPA. Um, for a little while now as well, for the last 6 months. Use of these things is growing and it's important. Where I think we're really going to see some real movement over the next several years has been, I think, in the linking of domestic real-time systems for cross-border payments much further afield. And so I think that's one key development that I think that banks need to pay attention to. And last but not least, I'd say is digital currencies. We have, on the one hand, a very open development of the digital euro by the ECB. We also have the digital pound strategy that's being produced by the Bank of England, and perhaps a little more subtly, the digital dollar happening in the United States. All of which, however, add up to an interesting implications for the commercial banks. Now, it's not entirely clear what forms these CBDCs will take. Nor is it clear how the banks will respond to them with their own types of stable coins or commercial bank money tokens, as I've heard people call them. There are a variety of types of responses that the banks could do for that. Now, all of this is a rapidly evolving landscape, I think, in particular the digital currency side of it. But all three of these things together, digital currencies, cross-border payments, and instant payments, makes for, I think, quite a complex undertaking for many of the banks involved.
Of the trends you've just mentioned, one of the key enablers is the usage of ISO 20022. What are the key drivers of ISO 20022 adoption?
So in this context, it's a fascinating question. So for a number of years, you've seen markets try to sort of replace existing or historical data standards with ISO 2022. And the reality is that I think that ISO 2022 is a tool, not an end in itself. It's a means to an end. What it means is that as you go through and you do a thorough modernization of a national or regional payment system, you may replace a legacy standard with ISO 2022. But there are precious few. Let's say this. I don't know. I can't think of a single example. I should say, not precious few examples, but I can't think of a single example of a real rip and replace strategy without doing a thorough modernization of an underlying payment system or a thorough modernization of a bank's own internal systems. So there are two different sides to this. So the idea here that I think that ISO 2022 is somehow an end in itself. I think is misunderstood by many people, but rather I think the key thing to remember is that it's a tool. Now, that said, it does enable a variety of new services, right? Its ability to carry additional information, its ability to enable greater harmonization, greater standardization using a wider variety of software tools from around the world and so on, makes it a key enabler of efficiency, makes it a key enabler of new value added services for banks and payment systems operators alike.
Thanks, Leo. Instant payments are now regulated in the EU. How would you characterize the headwinds and the tailwinds affecting instant payments?
So here I'm actually going to draw on some research that's done recently published by a company called Red Compass Labs and some good friends that I have over there. They did a survey of banks across the EU and they identified five key challenges that banks face. The first of which is adaptations to customer channels, including the verification of payee service. Now, you mentioned this in your introduction, Jackie. And one of the things to remember about the instant payments regulation is that it actually goes, in some ways, goes beyond regulating instant payments entirely because the confirmation of payee or the verification of payee service applies not only to instant payments, but applies to all types of credit transfers. So that means even a file of batch payments, right? A BACS file in the UK, an SCT file in the euro area, an ACH file in the United States, right? Those types of transactions, even as long as they're within the euro area, are going to require that the banks confirm or verify the payee on those transactions as well. And that means debulking a file, verifying the payees, and notifying the originator of that file whether or not those payees are the appropriate ones. And actually adapting all of the customer channels around that. It's not just mobile phones or websites, but it's file submission channels. It's it's APIs that might be being used to initiate customer payments as well. So it's quite a complex undertaking. The second key challenge they identify is implementing provisions related to KYC, know your customer regulations, and sanction screening processes. Typically banks will have many different applications for accomplishing these things, and and some of them are varying ages, varying abilities, varying throughputs. And actually being able to do that in real time across multiple channels and across multiple payment systems is becoming very challenging for the banks. The third one is that as volume begins to shift from batch payments or from other types of payments to perhaps more toward real time, or real time begins to capture a greater share of payments, actually processing that volume and scaling the throughput is going to be really challenging. Certainly within the euro area, in run up to the 2017 introduction deadline for SCT Instant, many banks put together solutions, based on, I don't know, spit and chewing gum, to be able to comply with the regulations at that point in time. However, as volumes grow, I think some of them are really going to run into some challenges. I think in being able to scale the solutions that they put into place. Fourth is creating the business case for building the value-added services that sit on top of this. So whenever adoption gets driven by regulation, right, and of course when pricing even is regulated, as it is in this instant payments regulation as well, it makes the business case much more challenging. Um, so that said, where we've seen the most success, and when we look around the world, the way in which real-time payment systems have been adopted, is where banks have put in the effort to build value-added services that are overlay services over and above that go beyond the simple processing of the payment. After all, the processing of the payment itself um, is commoditized. However, the variety of services that a bank can build around that are really, really important. And knowing, of course, who your customers are and what their needs are is paramount to getting that done. The last thing that this research from Red Compass points out is the 24 by 7 availability. So there are a variety of solutions in place for that. Sometimes banks use something akin to stand-in processing for cards, where for the hour a day or so that they need to take down systems for maintenance, there's a stand-in processor that actually handles that. Sometimes you can have active redundant configurations that help keep that going. But there are a variety of, I think, IT architectures that can facilitate that. However, the real challenge is that moving the majority of payments from a batch update environment into a 24 by 7 environment really is challenging. And it's not just that side of the IT operations, it's issues like customer service. What this means that when you move more payments to real time is that when a customer is trying to initiate a payment at 3 o'clock on a Sunday morning, right, and they're having problems initiating that payment, they're going to call the bank. Well, right now, the people may not be available who can actually help them with that problem. So you actually have to consider more than simply just the IT side of things. It's also a people issue.
So, Leo, what will it take then for the US to catch up with the rest of the world in instant payments?
Yeah, so there's a fascinating thing, right? So the U.S. has taken a very different approach to this than Europe has, right? So the U.S. There is no regulator that has the legal authority to mandate that American banks join a real-time payment system. Um, and even if they did, it's unlikely that they would use it. It seems to be given the current political environment. So one of the key questions in the U.S. is how do you actually achieve reach? How do you achieve ubiquity? The latest numbers that I've heard means that the system being run by the clearinghouse called RTP reaches about 70% of accounts in the United States. Um, the new FedNow system, the only numbers I've seen there are that they're reaching about 500 out. The number you quoted, Jack, was 500 out of 9,000 banks. That seems pretty plausible. I've heard similar numbers at the NACHA conference in Miami a couple of weeks ago. So that said, though, that leaves lots and lots of small banks and approximately 25 to 30% of the market not covered. And we've done analyses of other parts of the world that say that there's a certain inflection point. We've done statistical regression analyses across a dozen or more countries that actually what needs to happen is that you need to have the percentage of accounts covered needs to hit about 92, 93% roughly. And once you hit that kind of a number, then suddenly things begin to take off. There's a bit of there's that's where sort of the economic network effect, the positive network effects kick in. And and so above that, what it means is that if I'm going to pay you, Jackie, I may not know if your bank is on the real-time payment system. However, if there's a 92, 93% chance that that's the case, right, then I'll just assume it's the case. But below, call it roughly 90%, I'm not able to assume that that's the case. And that actually inhibits um, the adoption of real-time payments. So what needs to happen in the US? We need to get more banks on the system. Okay. What would also help would be interoperability between the Fed system and the clearinghouses system. Right now, those two systems do not interact with each other. There are variations even in the technical standards. There are variations in the business rules. There are variations in how settlement works, and so therefore the two aren't currently compatible. These are differences that can be ironed out, but both parties need to put in the work to do that. Last but not least, I would mention we need to see an integration with partners and additional use cases being brought online to give people the ability to make real-time payments in the U.S. in ways in which they can't do it right now. So a lot of the banks on both of these systems right now are still only in receive only mode. So they aren't, or some of them are only allowing their corporate customers to send payments. They aren't allowing consumers. There are a variety of reasons why this is happening, and that right now that's still depressing volumes. But over time, I would expect that to open up, and it should open up, and it will have to open up in order for the U.S. to catch up with the rest of the world.
You've written a lot about interoperability issues in the global economy and the importance of an inclusive ecosystem. Do you think the industry is doing enough to enhance interoperability?
Oh, yes. So I'd say that my comments that I just made about the United States and its real-time payment systems at a national level, generally speaking, yes. Again, those comments about the US notwithstanding. When I look at what's happened, for example, across the euro area, right, we have wide interoperability for SEPA transactions being processed by thousands of banks. And then, of course, there are payments that are being shifted from one scheme to another one, right? So we have a bit of ambiguity here about what we mean by interoperability. So within SEPA, we have card transactions that flow over SEPA. We have and so on. So they're both the card and the batch payment systems are intertwined in Europe in ways in which they aren't in many other parts of the world. That said, you also see issues of interoperability. There are other ways of solving the issue, like what India has done with the UPI by building effectively an interoperability layer, an access layer around its instant payment system that allows various third-party apps to hook into it over the top. Brazil has done something similar with its PIC system. And yet other countries like China have taken an entirely different approach, right, with their mobile phone and QR code driven interfaces that actually rely very strongly upon the fintech side of the industry. So at a domestic level, we've seen that happen quite well, I think. Where we haven't seen it, I think, is at cross border. And we're seeing a number of initiatives across the industry at the BIS, at SWIFT, as well as bilateral agreements like IXB between the clearinghouse and EBA clearing, agreements between India and a dozen other countries, I think, or so, about bilateral agreements to facilitate cross-border payments. Singapore has done something similar across Southeast Asia with bilateral agreements with Thailand, with Malaysia, and others, and so on and so forth. So we've seen quite a bit of developments, I think, about cross-border payments. The issue with that, though, is that the interoperability, while at a technical level using ISO 2022 is a solvable issue, the real big issues here are the business issues, right? Which is how do you guarantee certain levels of service? What do you do when a payment goes wrong? How do you handle exceptions? How do you handle legal differences between different jurisdictions? How do and what are the rules under which these payments need to be processed? And those are the things that need to be overcome. That's the work we're seeing being initiated by SWIFT. We're seeing the work being initiated by the BIS and others around the industry who have a strong interest in seeing this happen. But I think there's still a lot more work that needs to be done.
Thank you. Now, before we close out, take us into the future. What are the two or three most important trends in the financial world that banks should be paying attention to?
I think I'm going to use this opportunity to return to the three themes with which I started. The idea that instant payments, there's been some argument of whether or not it's the new normal. Uh, the answer, of course, I think that's actually asking the wrong question, right? In the sense of, is it the new normal? I think the answer is, of course it is, but it doesn't mean the other payment types are going to go away. There's a role in the world, okay, for cards. There's a role in the world for ACH and batch payments. There's even a role in the world for checks, right? There's even a role for cash. These are, payment instruments that are favored by a lot of people. I think the key thing, though, is enabling that choice and giving people the choice that they're giving consumers and corporates the choices that they need to engage in financial transactions in the ways in which they prefer. That said, instant payments will grow in importance over the next 3 to 5 years, far beyond what we see it being now. In the same way that we look at, we aren't using fax machines anymore, even though we could choose to use fax machines, but we use email because that's a whole lot more convenient. We don't ride horses, we drive cars, and so on and so forth, right? So as new technologies come in, they tend to displace older technologies, but they don't do it in every case. Okay, so the second topic, cross-border payments. I think that over the next 3 to 5 years, we will see more and more solutions being put into place that ease cross-border payments for a lot of people and for a lot of transactions. The obvious places to start are with the high value corridors, places like the euro to the pound, the euro to the US dollar, the US dollar to the pound or to the yen, okay, and so on and so forth. So the variety of ways in which I think we'll see that come into play over the next 3 to 5 years. And I think that we'll see that as well. The continuation, actually, I should have mentioned this earlier, the continuation of a revolution in the consumer experience of making a cross-border payment as well. That non-banks have really made great strides in making that a much smoother, easier, and cheaper process for consumers. Third is, I think, digital currencies and CBDCs. I think that within the next 3 to 5 years, it will become much clearer to us what central bank strategies are with regard to digital currencies. It will also become clearer to us how it is that banks will need to respond to those trends. Sometimes they'll be acting as a distribution channel for those CBDCs, and other times they may be acting as a competitive force through the issuance of stablecoins. That dynamic has yet to play out, but I think it's one of the most important trends of the next 3 to 5 years that we should keep a close eye on.
And with that, we bring this episode to a close. Leo, thanks so much for sharing your insights on the latest developments in the industry. It's been great having you back on the show.
Well, thank you, Jackie. It's been my pleasure as always to talk with you, and I look forward to the next time.
And to our audience, thank you for joining us. Catch us next time on SoundCloud, Apple, or Spotify. Until then,